Crop condition ratings were out, and really not a whole lot of surprise to the trade. The trade was basically already expecting a pretty good number here. Let's go and find out where the corn condition along the I-80 corridor stood on the report yesterday. Nebraska, 87%, good to excellent. Iowa, 79. Illinois, 82. Indiana, 72. And Ohio, 72. So all of these numbers for the corn, much above the 70% in good to excellent shape. Soybeans also came in pretty good condition as well overall, with Nebraska at 85%. As you go east, the ratings drop just slightly. Iowa, 76% good to excellent. Illinois, 78. Indiana, 68. And Ohio, 68. Obviously, you can tell where the warmer temperatures and the moisture have been, and that was in Nebraska, showing up in those crop ratings. What about the futures today? Well, we have firmed over the last hour and a half or so. We've got September corn down 2 3/4 at 354.5. New crop December down 2 3/4 as well. Over in the soybean market, though, this is a market that was higher, and we've pushed even past some of the earlier highs. 857 1/4 now on the August. That's up 9.5. November up 9 3/4 at 872.5. And the wheat market has also been on the higher side, but here just over the last about 5 to 10 minutes started to weaken again. September Chicago wheat down 1 1/4 at 512.5. September Kansas City wheat up 1.5, 512 1/4. The Minneapolis wheat market, and by the way, that spring wheat coming in with good conditions again this week. September Minneapolis wheat up 1 3/4 at 563 3/4. And the December cotton down 42 at 86.39. So at the edge of the trading floor, joining us right now, Scott Gecas. He is with Longleaf Trading. And Scott, what are you hearing there on the floor today? What's the chatter?
Everything is focused on the emergency aid to farmers from Trump. You know, for the last few weeks, I've always been talking about the Trump risk. As of late, this is a perfect example of that. You know, last week I was talking about that put-call ratio switching from the put side to the call side. We've seen fresh buying come in the last week. In the corn market, you're seeing funds increasing their longs by 7%. That's the largest one-week increase on record. So everyone, that news that broke today about the aid, it seems like that was leaked a little bit. That's something that doesn't normally happen too often, but seeing that put-call ratio switch last week and then seeing that fresh buying coming in with the soybean market in Nov, we're very bullish above 870. If we can break that 880, you're going to see the 900s very soon. In a corn market, we're going to be bullish in December above 370.
All right, well, this wheat market kind of floating around here a little bit today, too, and it had been the leader up to this point.
Yeah, you know, the wheat market, crop conditions straightening off of that motif. You know, dryness is affecting production globally. You're seeing global production decline left and right. So, you know, that 520 level is going to be a key resistance level.
All right. Scott Gecas here with Longleaf Trading. And, Scott, we need to talk about the livestock market. So when we come back, let's do just exactly that. That's all straight ahead right here on the Market Day Report. With the live and the feeder cattle futures on the weaker side here today. And over here in the August live cattle, we are seeing anywhere from 30 to 40, in some cases 90 cent drop. That, in fact, 90 cents is where we're at, lower on the August contract, 107.82. The high of that contract, 108.85, and we were hovering around that 108 for some time, but now we're getting closer to the low end at 107.78, just off of that, just by about a tick or two. October down 68, 109.92. December down 52 at 114.38. Feeder cattle also weaker here today as well. The August feeder cattle down 73, now at 152.52. September down 77 at 153.55. In October down 65 at 154.50. Hog futures, they've been higher since the early trade this morning, with August down 52 at 65.90, the exception to the rule, with October is up 6 at 52.68, December up 44 at 47.72. We did have that cutout information that was released earlier in the hour, and the choice for the beef was actually up 31 cents at 205.13. The selects down 30 cents at 197.73, but the pork, that was lower all the way across the board. In fact, it was carcasses down 206, one of the bigger moves we've seen there in some time, 78.01. The loins down 309 at 73.48. The hams down 95 at 52.93. The belly market down $6.78. Now trading at 154.79. Let's go back to the edge of the trading floor. Scott Gecas is there. Scott, I'm seeing where we've got some bids now starting to surface here for this cash cattle trade and asking prices. 115 in the south, 183 in the north.
Yeah, and the cash cattle or the cash trade right now is the only thing that's positive, and it's the only thing that's holding these markets up. You know, that cold storage report came out. They were up 8% versus last year, just confirming the supply concerns across the board. You know, inventory is still a strong concern. The strong dollar is expected to spark stronger imports. Hopefully, if we see that, we're still eyeing that 110 level, that gap fill. That's going to be a key resistance level for the cattle market.
All right. And if we would happen to trade cash cattle above that again, we're still trading at a discount to the cash.
Yeah, and that's what we're waiting for the futures to catch up to cash. We're going to see how that actually really plays out. But it's all going to be determining on the supply. You know, supply concerns are rampant across the board in the protein complex. Can
you say the same thing about hogs as well then?
Yeah, and you can see that specifically in the hog market. You can see the chart just still looks broken, not getting really any bounce or relief off of that. It's going to all come down to the export numbers coming out in the near future.
What about the midday cutouts here where we were lower? This is the first time we've seen this much of a lower trend here on the pork cutouts, yet the futures continue to be rather resilient here today.
Yeah, it's a weird dynamic. I think you're seeing maybe a little bit of consolidation period. In the hog market in particular, that 65 level is a key level. If we do pierce that 65 level, you're going to see shorts coming in. You're going to see a big spike in volume, and you might actually see follow through all the way down to the 60 level.
All right. Scott Gecas, long leaf trading at the edge of the trading floor in Chicago. Good to talk to you. Thank you very much. Have a good rest of your Tuesday.